Good afternoon, everyone. Welcome back to the Daily Commodities Update Show, where we update you guys on natural gas, gold, and silver, and the US dollar. And we look at the price action as it's the most fundamental thing that we look at because all indicators are derived from price action. And I'll be giving you guys support and resistance levels as well as where's the most likely scenario where price would be heading for natural gas. So yesterday we were talking about where natural gas showed no signs of potential top yet on its move. And I talked about where if we get over this, our move is going to likely continue, and we have not have our daily lower high set yet. So currently, we still see no signs of natural gas stopping yet, and this is still one initial move. You guys remember I talked about yesterday where I want to see a trend change on the daily time frame, and so as of now, we don't have daily consolidation yet, meaning the move for natural gas has not likely more to go. So consolidation just means that we want to see a candle go below the prior candle to set the higher low pivots. And we want to see if there's any buyers after we get the momentum losing. So essentially a trend change shows us that there is actually real buyers other than versus where this is a momentum move from the bottom to the top. The trend has not changed at all yet. So this 15% move, we're still in a daily neutral trend with a daily downtrend here, but now it's back to a neutral. And I want to see a pivot, higher low pivot being set. So, and then break above the prior high for that trend change back to the daily for the bull's favorite back to the uptrend. So that the psychology of a trend change is that everybody is FOMOing here, right? It's a momentum move. And buyers are buying to get in at a high price and then get out at a higher price. So when the momentum fades, let's say we get a couple of days of pullback, we want to see if there's any real buyers we want to buy and hold for the next move up. So we can set that higher low and then break above the prior high. That means there is real buyers in these levels, and it forms a more foundational support level in that zone for the move to head higher. So as of now, no signs of the momentum stopping yet. So we could potentially have a higher move, just like this move right here. From this A to B move, there was zero trend changes, but we went up. Let's see here, we went up close to 22% without a trend change, and we tried to change the trend here. See that pivot being set higher low, and we failed, and that's when the daily downtrend confirmed. So this next move right here, we're sitting right at resistance now at 2.8 and this 2.79 zone. So tomorrow we'll see if we get over it. If we don't, it's no big deal. We can still pull back, and let's see if we can get a bull flag going on the daily. So a bull flag is what you measure from the bottom of the move to the top of the move, so A to B move, and the opposition move, so the retracement, cannot go below the 38.2% zone. So let's say we pull back for a few days, 1, 2, 3 or something, and then pull back here and then bounced. That means it's a potential bull flag. And if we do break above the prior high, then that's a confirmed bull flag. And so now, still zero signs of pullback. So, but we can just get these moves going because this is a potential resistance where it can potentially reject, right? So, but anything, or we can just gap up and then we can keep going. So, right. So, anything can happen. Now, because we closed at the high of its day, the most probable scenario is that it will potentially continue. We are a little bit overbought on the short-term time frame on the hourly, and let's see if we're overbought on the 4-hour. Just starting to reach overbought on the RSI, but that doesn't mean it's going to stop when it's overbought. As you can see over here, overbought can stay overbought. So oversold can also stay oversold. So it doesn't mean just because we're overbought, the price is going to retrace. But we just got to be a little bit cautious chasing momentum to give us more powerful trades, because we don't want to chase after such a significant move already, right? Off the when I talked about last week on this maroon support looking line, we're here 1, 2, 3, 4 bounces. That's where we should be adding. now after it's bounced 15%. But momentum is still strong, so we'll see if we can actually test the upper range of this resistance. So the resistance over here, so quite far away from that upper zone. Let's take a look here. You're another 10%. So we still got a couple of resistance that we got to go break before we get to that zone. Still got to break this one, 2.85, and then the $3 one, which is coincides with pretty much top of the zone as well. If we can do that, then we'll probably head over to here. And that will be a really good sign for natural gas. That means we are at a 52-week high if that happens. But as of now, still quite a bit away. Because if we do get over that, look how little resistance we have over here. So when I talk about volumes, the less volume in one area, the easier it is to cut through. So you can see on this drop, this was it. There was no other like volume in that zone. So it's very easy to cut through it when we come up to it, as well as when we come down to it. Versus this zone, this entire zone, the zone of sideways, where there's a lot of volume in here, and price actions where there'll be a lot of resistance and support along the way. So it's a lot harder to cut through it. Once we get above here, there's just not that much, just this zone left. And less volume means less people bought here, meaning less bag holders. So it's easier to up. Similar idea to gaps. You guys know you see gaps on charts. That means there's just no volume in that zone. So when we go through the gaps, it's very easy to cut through those gaps as well. You see that a lot in stock markets. And yeah, so you guys want to check out the stock market video, I'll be uploading right after this one. And we look at the QQQ, S&P 500, as well as the 7 mega cap tech stocks: NVIDIA, Tesla, Apple, Amazon, Google, Microsoft, Meta, and I might miss one, but all 7 of those, NVIDIA, and I already said that one. But yeah, those will give us better directions of where the market is heading. And get back to natural gas. So yeah, on the hourly, we zoom in and we can see that we pretty much close at the high of its day, and we are in the hourly uptrend. You guys remember I talked about the very first step for any momentum shift is hourly trend changes, right? So that's essentially what we got once we bounce off of that maroon looking line support right here. We zoom into the hourly. When we bounce out of here, I said this big enough bounce now, and bulls play defense, double bottom. I think I talked about this on Saturday last week, that we're very likely going to bounce here. So, and then we got our hourly trend change over here on Monday. And now we are adding that momentum after that initial hourly trend change back to bulls' favor, while we had an hourly downtrend this entire time over here. Now we're back to hourly uptrends. So the next step I want to see is that bull daily trend change, but as of now, no momentum slowing. So we don't want to guess what's going to happen, right? But when we see here, the most likely scenario is that it'll likely continue tomorrow, because those kind of days, you can just say that time ran out. Bulls probably wanted more, so time ran out, and they could have. Let's say we have another hour or two, they could have went higher, right? Because we don't know. But that's because we closed that high of his day. Just as if we closed that low of his day, bears potentially could have went further. Time ran out. So hourly trend is going to be our guide and continue to head higher. So bulls are looking good in the last couple of days, and give me some daily trend change supports along the way. Then bulls will be happy, and then we keep going. All right, let's take a look at UNG. So UNG is the tradable ticker for natural gas, and similar, you can see when natural gas has a really strong move, UNG will also have a strong move. Let's take a look at the difference: 5.4%, 5%. Okay, so surprisingly, UNG actually has a daily uptrend. So you guys know what I talk about. So this is the low, and that pivot right here is the higher low being set. So a candle went below the prior candle. Now we have that pivot. And then we went above the prior high, the 7.18 high, by a tiny bit. We could call that double top as of now. But if we just break above it a little bit tomorrow, we have confirmed a daily uptrend. Excuse me, just had a cough there. So then we have a daily uptrend confirmed. And that's a good sign because we haven't had a daily uptrend since all the way back over here in June. So it's been a while. And we'll continue to see if UNG and natural gas continue to be strong. And we zoom into the hourly. Let's take a look on UNG. See, we have an hourly trend change yet. You could say we had a this being higher low, higher than this low, and bounce above it and say that we have the hourly trend change. But as of now, give me 1 second. It's going to turn off. All right, so we have an hourly trend change back to bull's favor as well here, and we'll continue to ride it. Same thing with natural gas. We'll continue to ride it until we see signs of pullbacks. So let's say we on natural gas here on the hourly, say we get another leg up tomorrow, and then we confirm an hourly downtrend. After that, then I'm going to say that the daily top is likely set, and then we'll potentially be looking for that higher low pivot now. So as of now, no signs of that yet, and we'll continue to watch this in the next few coming days, tomorrow and Friday, and we'll see when we get signs of slowdowns, and I'll let you guys know. But as of now, momentum is strong, and we'll continue to ride the momentum until we see weakness. So BOIL is the 2x leverage for UNG, also the tradable ticker. And so if UNG is up 5% today, BOIL should be up 10. Let's see here, 5. We're up close to 10, but not as much. Sometimes the leverage is a little bit off because I'm balancing all that stuff. But this is a long side for 2x, and KOLD is the short side for 2x, so it's down 7.7. So the exact opposite of BOIL. And never chart these two because you never chart leverage charts. Just chart the original chart that I followed. So that'll be UNG. And now let's take a look at gold. Gold, we are at slight breakout, and we'll likely be heading back up to this black looking line. I remember talking about this yesterday where this black looking line was strong support for a very long time, actually. You can see back here as well. So all the way back to February. Actually, even further than that, all the way back to November of last year down here. So bounce, bounce, bounce. And recently, bounce, 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 and fell when we broke through it. So now when we come up to it, back at strong resistance as well. So we have a pretty strong move from the bottom to the top, and we have a daily trend change over here. So very likely we come down to it, we can potentially, excuse me, we can potentially likely get a little bit of pullback, and then we'll see where it heads as well. That's the next level I'm going to be watching. Let's say we get that tomorrow or Friday, it would be close to 1962 or 1960 zone as well, which coincides with actually, you can see the zone also has some resistance over here as well. Resistance over here, resistance over here. It was acting as support prior. See as supports, and now when we're below it, it's going to act as resistance. This coincides with two resistance zones. That's where I will be looking at. Let's look at the dollar to see if dollar weakness is continuing. Yep. So when dollar is weak, it's an inverse correlation with the metals. Metals meaning gold, silver, and all the other metals you can think of. And right now, we slightly bounced over here, and which makes sense because you can see how many times we bounced over here as well at that close to that 103 zone. And if dollar continues to stay weak and confirms a daily downtrend, then we're very likely to get more bounce on gold and silver. And I talked about this yesterday, where this could potentially be a head and shoulders. It is still potentially a head and shoulders as well, because this drop here is pretty much bounce at the neckline. So now when we bounce here, let's say we bounce here tomorrow, are we going to form a rejection from this maroon looking line, or over here, rejection from the 103.5 into Friday, and then pull back? And then if we pull back and come down to this neckline, Doesn't mean it's a confirmed head and shoulders yet. It could still just bounce back above it. We want to see a confirmed break below today's low, which is 102.936. That will confirm a daily downtrend as well as a head and shoulder pattern. And that'll probably bring more weakness into the dollar to the downside if we do confirm that daily downtrend and head and shoulder pattern at the same time. That will give us a big bounce on gold. It'll probably head higher into 1961 zone. And this 196, this 1969 zone and 1961 zone. If that head and shoulders, and I'm confirming, right? Bounce. While the dollar bounces, we pull back a little bit, and then the head and shoulder confirm on the dollar, and then we bounce. That is a potential scenario we'll be watching. And let's take a look at silver. Silver is slightly weaker now because it hit a resistance. So remember, guys, when I talk about relative strength and relative weakness, it flips when it hits resistance or supports, and especially a very key one. So after it being relatively strength down here compared to gold, a significant move, much bigger move than gold, and then we hit a key resistance. So this downtrending resistance here on the maroon line is a very key resistance. It's been rejecting for many months, since May, and now we just tested it, and we call this a initial rejection. Doesn't mean it's game over. Want to see if there's more follow through tomorrow from the bear side. So this is just one initial move, so there's no trend changes yet. So we want to see if the bears are serious about it and confirm a hourly downtrend. And if they do that, then we can say it's a clear rejection. As of now, just an initial rejection. So it's very common when we hit a resistance or support zone the very first time. And you guys have seen where it hits the support zone, right? The first time it bounces, and then the next day it goes lower, right? Very similar to this. We hit a resistance, it rejects. There's still potential where we can just go back up again, right? Until we see actually clear rejections of the hourly downtrend and say for sure this is a rejection. But so now it's a initial rejection. Where I'll be looking for silver. Silver's got a lot of room. So the prior pivot is right here at 23.9. So meaning if we pull back all the way to here, it's still in a daily uptrend. So no red flags at the moment for silver on the chart. And even if we pull back, say from here down to the pivot, we have 2.8% of room. So let's say we pull back where it was acting as quadruple top here. It should act as support. We'll come down to it and then bounce, and we might retest this. And we have to see if we may get over or not. That is a very probable scenario. Like when dollar bounces tomorrow from the head and shoulders, and then dollar pulls back, and then we retest and see who's gonna win out. So that's the most likely scenario. All right, that's all I got for you guys on commodities, and I will see you guys tomorrow again. And we do daily updates, and feel free to subscribe. If you guys made it this far, all the likes and shares are always appreciated. And if you guys have any questions, comment below, and I will see you guys tomorrow. And make sure to check out the stock market video, and I'll be uploading that very soon. All right, see you guys around.